Welcome to TradeDBI.com. This is John. This report is for the 10th. Well, off that support of the 61%. Continuing magenta above yellow. The rise was all the way to the 76%. It's pretty clean. Shakeout continues to rise. So we knew with this elevated MBI magenta that you're looking at one of those runs where uh, hard to stop because at that level it's going to take quite the amount of selling to really push things. And now you see potential turn of shorts pretty much having been squeezed out of it. And that's what new fund money will do for you coming into the beginning of the month. Still continuing, and from an NQ standpoint, just a little bit behind where the S&P is, but the readings are pretty much similar, though the shakeout's a bit softer from a NQ standpoint. Uh, for me, the question just becomes, when do you see a rollover? If you're looking deeper from a broader standpoint of the MBI gray blue situation, usually indicates where you get some kind of fade off, and we're not there yet. So it's going to continue to do the excitement. And, of course, everyone's talking about the unemployment number missed. That's only going to get worse. So this is a feed into the idea that the market believes the Fed is going to ease. And of course, you see yields getting back close to that higher range that they've been in. The real question, though, is how do you lower rates into an inflationary environment? And this is really the interesting question because uh, oil is not fading at this particular stage, even though you saw, you know, gasoline demand build, particularly diesel, and that's an indication of economic activity. Of course, we have to see if that trend continues, but it could be an interesting one because now you move back towards those fears that people were talking stagflation, and the reality is the Fed's nowhere near the target rate of inflation. And of course, you can just keep pretending that inflation isn't what it is. Of course, we even see the numbers that come through don't really reflect true inflation compared to what people are paying. But that doesn't stop anything. Of course, it's a bonus for the euro because they think that the U.S. is going to ease. Therefore, that promotes the euro. But if oil rates continues to rise, it's pretty tough to be interested in uh, having a euro that you've got to convert to dollars. And of course, we knew that this would explode gold, and by comparison, should also improve cryptos. They're in a bit of a little weak spot. Of course, this is coming off of the halving, so miners getting half what they are. So is it worth it for them, electricity wise, to be able to run the machines at these given things? That's what the expectation that Bitcoin will continue to climb, but doesn't mean it has to do it all at once. And ETH, of course, suffering from the regulatory conditions that exist. And so, when we look at it from a 50K standpoint, we've had a series of nice little runs, and then boom, we ended up with the MBI white. So yes, that will result in a turn down, but not yet. Not as long as that magenta continues to ride up at these levels, and you have an MBI white under that 10 category. Still clean to the upside from that standpoint. And we look at it from an intraday, it was just excitement building on excitement, building on excitement, because the Fed is hamstrung as to what they can do. And that just means that the market can pretend that lower rates are coming, even if they're not. It doesn't make any difference. It's the perception, and that's all markets are, is perception about what will happen in the future. And they believe that this is just going to bring about easing sooner if they see that there's softness from an economic standpoint. So that's the continued move, and you can see the excitement building here in Europe. That's the long and the short of it. And people always say to me, well, but that's not the reality of things. No, the reality is a perception. And the perception is that the Fed is going to do everything to make sure things are as soft as possible, and that's a bonus for the market because it just means that asset prices will have to rise to accommodate both the inflation as well as the fact that there's going to be easing for easy money, and continue until it can't. And everyone always thinks that the end is right there. It always reminds me of those guys with the signs that said, the end is coming. Even from when I was a little kid, here we are, many decades later. And of course, it's been going on for centuries. It's always doom and gloom. But uh, at the end of the day, we just have to go with what is, and the readings are pretty clear. So we'll just keep going with readings. As always, anything relevant, put on the Skype chat for you. Have a good one. Trade well.